If you really want to get a read on the health of the consumer tech economy, you don't just track the big hardware makers, you have to follow the money. And to do that, one retailer's performance is pretty much the ultimate bellwether. So today, we're diving into HDN's research on Best Buy's latest fiscal year to try and answer one really critical question.
Is it? After a few years of people tightening their belts, putting off those big upgrades, are we finally ready to start buying new phones, new laptops, and all those gadgets again? Well, the answer isn't a simple yes or no, but the data is starting to paint a very, very interesting picture.
Best Buy's results for fiscal 2026 give us a really fascinating window, not just into their own playbook, but into the broader state of tech spending. So, how on earth did they manage to engineer a turnaround in this environment? Well, it all comes down to a competitive advantage that's incredibly difficult for their rivals to copy.
So what is this secret weapon? In a market that's just flooded with online giants all fighting over price, Best Buy has carved out this defensible space, this moat, by focusing on something those digital-only players just can't offer, a real human touch. And it's a strategy that's built on one core idea.
They're not just a website, and they're not just a bunch of big box stores. They're a fully integrated system. This omni-channel approach is the real engine of their strategy. It means they can meet you exactly where you are, whether you're scrolling on your phone or walking into a store looking for some face-to-face advice.
And this is how they do it. Their full lifecycle service model. Look, it's not about a single sale. It's about building a relationship that lasts. Their Geek Squad isn't just a repair service anymore. It's the key that turns a one-time purchase into an ongoing partnership. Right from the moment you start thinking about buying something, all the way to recycling your old device.
And just think about the scale of the human capital behind this whole thing. 82,000 employees. That is not an automated, low-touch business. That is a massive team of actual experts delivering that personal human touch, which lets them command a premium and, more importantly, builds real loyalty.
And here's where it gets really smart, how they monetize that loyalty. Through their membership programs, they bundle all those high-value services, like tech support and protection plans, into recurring revenue. This creates this powerful, sticky ecosystem that just keeps customers coming back. And just look at that number, $900 million in deferred revenue. That's basically money they've already been paid for services they'll deliver in the future. It's a stable, predictable financial foundation.
Okay, so let's get to the results. Let's see how this whole strategy actually translates to the bottom line. Because if the human touch is the theory, these numbers, well, they're the proof that the plan is actually working. All right, this right here is the headline. After a decline last year, Best Buy managed to flip their comparable sales from a negative 2.3% to a positive 0.5%. Now, overall revenue might look kind of flat, but that swing in comps is the crucial signal that they've stabilized the ship and are pointing back towards growth. Operating income is up too. But the real question is, where did this growth actually come from?
This breakdown tells a really clear story. Nearly half of their entire domestic business, 47%, is driven by just one massive category: computing and mobile phones. This is the absolute heart of their retail operation. So, if a turnaround is happening, this is the first place we need to look.
And there it is. This is the engine of the entire turnaround. While other big categories like appliances and consumer electronics were still shrinking, computing and mobile phones surged by a really impressive 5.7%. This one category was strong enough to drag the company's entire comparable sales number back into positive territory. This is a huge clue that a new upgrade cycle is getting started, and it's almost certainly being fueled by the arrival of all the new AI-powered PCs and phones.
Now, this turnaround isn't just about selling more laptops, it's also about a real strategic discipline. You can see this focus in where they're putting their money and where they're not. They're investing in high-margin, asset-light areas like their ad network and their online marketplace, while making some really tough but necessary cuts in other places.
And those cuts were significant. The company took a massive $171 million write-down on its Best Buy Health venture. That's a huge signal that they're getting out of businesses that aren't working to refocus on their core strengths in retail and services. It's a decisive move to protect the bottom line.
So the internal strategy seems to be working, and the numbers are looking better. But of course, no company operates in a vacuum. So let's talk about the pretty significant storm clouds gathering on the horizon that could challenge this whole recovery.
First up are the big economic hurdles. You've got persistent inflation, high interest rates, and shaky consumer confidence. All of these things pose a direct threat to spending on the exact kind of non-essential big-ticket items that Best Buy sells. These macro pressures are a constant risk hanging over their forecasts.
And then beyond the economy, you have some pretty serious geopolitical risks. The analysis puts it really bluntly, saying that any deterioration of relations in that part of the world could seriously disrupt the manufacturing and flow of critical components like semiconductors. A disruption there could choke off the supply of almost every single product on Best Buy's shelves.
But, the risks are balanced by some pretty big opportunities. The very same technology that's driving this new upgrade cycle, AI, is also a massive opportunity for Best Buy's own operations. They're already integrating AI to create more personalized shopping experiences online and to make their physical stores run more efficiently. This is definitely a crucial area to watch for future growth.
So this is what it all boils down to. Best Buy has pulled off a brilliant strategic pivot. They've built this formidable human touch moat around their business, and the latest numbers prove it's working. But the critical question, the multi-billion-dollar question is this. Is that moat strong enough to withstand the perfect storm of economic and geopolitical headwinds that are gathering right now? That is the major uncertainty hanging over the company in the year ahead.